It is February 24th, and another exciting day in this market. You know, I woke up bright and early this morning, as per usual, to an entirely red screen and potentially war here with the Ukraine. Russia attacks the Ukraine, and the market's down 2%. And they have more or less corrected. I definitely had to sit on my hands and just stick to my knitting and realizing that you know, you can't just sell because everybody else is selling and they're freaked out when you're a fundamental person, because it doesn't, like, these are the best buying opportunities. And I kind of want to go through this a little bit with you. As you guys know, I had said, fair and square, I'm just going to go ahead and take this mini victory lap, that the net loser in any kind of conflict with the Ukraine is not the United States. If anything, we're a net winner. I'm going to display that and demonstrate that much more clearly today, but it's really Europe. And so I had talked even to David after we closed it out yesterday. I probably should have said it once again, but I've said it a few times, that the VGK index, even though, oh my gosh, it's Trill. Hey, Trill. The VGK index, even though VGK is got a whole bunch of stocks that I typically love, like Nestle, like boring stuff, VGK is one that you want to kind of dance around when you're really worried about what's going on in the Ukraine. VGK did not respond most of last month, despite the fact that you got to understand what's actually happening if in any kind of scenario, Europe is not getting out of this without conceding to Russia. And if what we're going to actually do is take all of, I don't know why it's not coming up. Just my luck, it's not coming up. But if we're going to just continue to escalate this, the VGK is going to continue to actually start to show the cracks that it should show. I mean, so let's get into it a little bit here. So we've got a huge, from the 2% that I saw the S&P down this morning, we're already more or less, I'm going to call it more or less flat for the NASDAQ, which was down the most. The S&P is still trading down. I think that this doesn't make sense because some of the companies that actually benefit the best, although tech is largely untouched in a lot of this, but the S&P 500 itself has tons of companies that aren't just largely untouched, but huge beneficiaries, like net beneficiaries. The Russell actually should probably be down ever so slightly a bit more, but quite frankly, I think that some of the things that are happening in the Russell should actually benefit them as well. So I kind of get this, but I'm a little bit of a hater that the Dow is down 2% and the S&P is down significantly less than the NASDAQ and the Russell, because honestly, these two legit benefit more in the case of war than these two do. I'm just saying, from what has been happening previous to this announcement. If I look at FinViz, this is what it looks like. I mean, look, I can't draw a better heat map, so why not just let them do it? Google, which you know is by far to me the cheapest large cap name, period. Like, period. It doesn't make any sense. If we're going to talk about valuation and people are going to try to throw that word in my face, Google trades at about, this morning when it hit its low, it was trading at almost 1/2 its PE to growth rate. It was ridiculous. Amazon, which I covered some of my short because people want to bounce around this, is ridiculous that it even is doing what it's doing. And it was a great question yesterday from David, so I'm just going to double down and explain to you what I saw in earnings and why I think that this $1 trillion valuation nonsense, I need to understand where you're coming to with that and why you're coming to that, because I'm going to show you what I actually saw in the numbers that they presented. Tesla. Okay, look, Tesla, we're going to come back to another day, but I was a net buyer of Tesla off its lows this morning, so I'm just going to share that with you one way or the other. Not that I mean, I think Tesla is dangerous right now, so I'm not going to say it so aggressively, but in fairness, it's not like this company makes no money. Some people are still of the mindset that this company is no longer. Look, if you're in the S&P 500, you have to be a profitable company to get there. And they've actually improved every single quarter since they've been in the S&P 500. So I think some people still have this vision of what Tesla was and where it's moved to. Not that you can't trade around it, not that this thing isn't volatile, but if we look at this market, there's some really weird stuff. I think the stuff that's trading up is simply trading up because earnings haven't been reported yet and it's coming out. So there's a risk to just being short it. Moderna actually reported this morning a great number. a great number, okay, and a decent progress on its pipeline. It traded down first. I covered literally any hedge I had on it. And so that's kind of the lay of the land in the market as it's recovering. What I really want to say, if you take nothing else away from this show that we're doing every day, have the names that you would buy for your children, okay? And on days like today when the market goes bonkers, go ahead and buy them, because that, even more than options, even more than anything else, that's how multi-generational wealth is really made. It's by buying things cheaply and either never selling them and using them as some sort of asset that you hold for other things you're trying to do in life, or selling them when they're massively overvalued. Okay, let's get into some of the things I really have been making me a little crazy on how people talk about stuff. Let me just say it that way. We have for a while been talking about these dynamics which we think will drive the market, which is this geopolitical instability. So to the extent that you can get smarter about that, you can figure out these days when the market's red to feel comfortable, to have diamond hands, if you will, to go in and take a little bit more exposure to the things that you've wanted. There's no reason to pound into the names that you want if you are an investor, but if you're a day trader, I get it, do you. It's all good. We want to talk about the fact that some companies have this weird supply-demand dynamic. There are some massively long-term changes of behavior across every single industry that you have to take into consideration. And also, you know, some companies are legit strong right now, and some companies don't make money, and some companies have a great strategy for how they're just going to crush it, and nothing has changed where that's come into play. These are my ratings on what I have seen of the 374 companies that I have listened personally to their call and reviewed all their financial documents. And about a little bit less than last time, so we're at like 62, whatever this is, 67%. So a little, about 2/3 are coming in still financially strong. This is not beat estimates. This is not all that nonsense, because I cannot depend on the street to actually keep their estimates correct in systems. So I just go by, did this company report a good quarter, and did they more or less manage this supply chain? For the 45, these companies expanded operating margins, like Visa, like MasterCard, which I think are a little bit expensive right now. It's a little scary to be in them. So I'm not necessarily saying here is where you take your play. But there are definitely companies that are expanding operating margins. In other words, for every dollar they make, they get to keep more of that dollar, right? And then there's 207 companies that are more or less keeping that more or less the same. They either were able to expand it a touch or keep it more or less the same. So every dollar they made, that thing came straight back to you as an investor. Or alternatively, you know, if they're off, it's off so small, and there's a very clear articulated words that tells me how that's going to actually improve next quarter if we continue to have long-term inflation. 60-something%, almost like really it's 2/3 of the S&P 500 is doing just fine. Then we've got these guys. I just need to see another quarter to prove to me, given how much your operating margins decline, that pricing actually gets through. And then we got these puke outs down at the bottom. What I'm saying is that there's real market differentiation between winners and losers. And whenever I see the losers not be penalized for losing, I get like kind of intense, which I think makes it for fun. Makes it a little bit fun for everybody. Now, we want to talk about the fact that, in fact, we are seeing this dynamic here. Oil hit 100, like really came up and kissed $100 this morning, and then backed off into 96. And yesterday, David, just to provoke me a little bit, make sure I talked about this, was like, is it because they're hedged and, you know, that there's just a delay? And I was like, is that what people believe? Cute, very adorable. Because more than one company has come out and said, we are not hedging in this marketplace. And I want to show you something that a lot of people don't always look at. And that is the actual commodities curve. Now, some people have their screen set up. If you're using Interactive Brokers, you probably are able to get this just as a chart. I'm using Tasty Trade, so I'm not able to get this as a chart. But if Interactive Brokers, Bloomberg, I believe there may be a function depending on how you're set up in a couple of the other broker dealers, TD Ameritrade, to actually see what the curve looks like. And the companies have said more than one. I am not talking like I'm not just like saying some stuff to you guys. I swear this is true, that they are not fully hedging. number one. And the reason is because the curve is in backwardation. The curve is in backwardation is a bunch of jargon words that I'm going to just make sure is crystal clear to you. This is the price of oil that is often quoted. Usually they're quoting either this April contract, which is the immediate contract to close, or maybe, depending on what you're looking at, you might be seeing this May contract, right? 97 bucks. Okay, I have to refresh my screen. It's now at 96 or whatever. But if you look, what they said was, why would I hedge if I'm only going to get, this was yesterday, so let's do prior settle so you can say, like, why would I hedge if I'm going to be paying a bunch of money to recreate oil in the 70s? Why would I do that? Number one, OPEC is at capacity, okay? OPEC is at capacity. Number two, there's this massive insecurity with what Russia is going to do as relates to cutting off Europe to oil. So like, if more than one company is saying that, then guess what? This nonsensicalness that these guys are all hedging out their oil exposure at 70 bucks is like loony bins. And in fact, I showed you guys Apache the other day and where they hedged it out at in December. Okay, but remember in December when Apache was doing its thing, Biden was doing his thing to try to bring the price of oil down, and he had actually brought it down to sub 70 bucks. It was trading with a 6 handle. It was trading in 65-ish, I want to say. And their hedge is at 76 bucks, my loves. Do you know what I mean? So this idea that the traders at actual oil and gas companies are somehow magically, for the first time in the history of all oil commodity trading, dumber than the average Joe is just the most nonsensical thing I could ever hear. It's creating opportunities in all these names because, quite frankly, if you look at FinBiz, you'll see that oil and gas has recovered a little bit, but is largely red. It's so insane. So these are all basically opportunities. If you're going to do options, just go a little farther back because literally EOG reports tomorrow. It's going to crush it because EOG is what? The low-cost producer for the entire world at this point, you know, because your cost of production just went up, buddy, if Russia's attacking. So let's just call it what it is. And again, I just want to show this very, very clearly for the folks that might be coming in and seeing this for the first time. For the American companies, nearly every American company starts to be incredibly profitable. Their break-even points are under $50 oil. Okay, so that's your Devon, your Pioneer, your EOG. EOG actually makes money sub 40 bucks. So all of this right here, this is 83% increase, but it's actually a $92 price in oil. We're at 96, by the way, my loves. So, you know, at $92 oil, EOG is going to give all that money back via dividend or via what you have. This is the cheapest thing that's there. It ain't changing. And again, my thesis is not based on war. My thesis is based on this, which is President Biden deciding that he'd just like to cold turkey us off of natural gas. That is creating a very particular dynamic that you can see it clean as day. We are using more coal than we have ever used before to try to compensate for the fact that nat gas is so ridiculously expensive. This is actually what's driving things up. This, plus the fact that the curve is backwardated, is driving the price of oil and nat gas up. Why does the backwardation, again, drive the price of oil up? It's because that backward price, if I'm going to add capacity as an oil company, if I'm going to actually make more oil for you, then I need to go ahead and lock in that price. And I'm going to do that via the forward markets. If the forward markets aren't allowing me to lock it in a way that makes sense, I'm not going to make more oil, period. Like, come on. Would you do it if you were doing your business and suddenly you were like, well, I don't know. You want to give me less money if I make it today. And I know that there's a shortage, so I'm not sure why you're doing that. Of course, you would stop making the thing and like until they were willing to pay you what you know that stuff is worth. This is the actual dynamic that we're doing. This Russia stuff is just helping this happen all faster. So please keep that in mind. While I continue to like literally every company in the United States in particular that makes oil and gas, if we're talking about your kids money, these are the 3 companies to look at, because these companies will not nearly be as volatile. They still give you about a 6% dividend yield, and there is 0 risk to it. And this idea that onshore, offshore, I don't know why people are so confused. All of these nice little happy pipes go straight to the water, where it could then be carted off on a tanker to Europe, which is going to have a problem if it doesn't resolve its issues with Russia right now, because, as we've mentioned before, Russia does something between 30 and 40% of all nat gas and oil to Europe. They're the major supplier of energy to the EU. Okay, in fairness, Scandinavia's kind of got its own deal, so I'm not including a couple of countries in that. So that is where I will fall out today on energy, but I also want you guys to understand something about the United States that oftentimes gets ignored, and is why, like, when you see the US going down based on conflict in Europe, I want you to realize that we are the net beneficiary of conflict in Europe. And there are 2 things that I want you to understand there. The first is, this is global defense companies by market cap. As you can see, all of these little flags are mostly American flags, and you've got 2. You've got France with $56 billion in market cap, and Thanes, also a French company with $20 billion in market cap. Okay, but look at all the other defense companies, right? Okay, you get me on this. And the production of these defense companies helps the entire industrial complex of the United States. And also, I want you to see Huntington Ingalls, which is really making boats, essentially, right? They got the Newport News out in the Rhode Island area. That's them. That's their deal. It's really fun, actually, sometimes if you were playing with G.I. Joe things, to kind of look at these, for better or for worse. I know this is not a laughing matter in any way, shape, or form, but the thing is, that is a $7 billion market cap company, so that you can really get a sense that any other global defense company is significantly smaller than an American defense company. So this absolutely, because these guys, after we pulled out of Afghanistan, largely speaking, did not, well, I mean, in fairness, General Dynamics always produces a good number because they make G6s, essentially. I'm a Jay-Z fan. It is what it is, right? So General Dynamics is its own thing. Northrop Grumman also is its own thing. But there was quite a lot of weakness in defense spending after the pullout from Afghanistan. And of the ones that probably got hurt the worst is Raytheon, because they make missiles. But, like, you know, this is what the actual lay of the land is in defense. So the idea that the U.S. markets in particular. Now, the other thing I want you to look at is a map of China, okay, and a map of geopolitics. The thing that we have always globally that's beautiful is we have only 2 countries on our borders, and guess what? We ain't in danger of getting attacked by Canada or Mexico. China, which a lot of people like to talk about, big defense spending budget. In fairness, here's the defense spending budget of all nations. We got the U.S. Lo and behold, we have invested heavily in all of that stuff. The next largest is China, but let's look at the map of China. 14 countries border China, okay? It's a little bit of a different animal. A lot of times people forget this little baby fact here that is not insignificant. We're talking about defense spending. So just really want to highlight these things. And the last thing I really want you guys to highlight as to why, you know, we are very fortunate in the United States of America to be Americans. This is agricultural land use, okay? You see, and then I want you to see, like, yeah, okay, so dark green, that's beautiful, luscious land that you can put crops on. Yellow, it is 100% cropland at that forest. That's cropland that we've already put plants on. Pasture, you know, it's being used maybe for livestock, that sort of thing, but if we needed to turn it into cropland, we clearly and surely would. Once you look at the United States of America here, okay? And then you can look throughout Europe and this whole region, which is very mountainous, etc. But what I want you to understand is here is a population density map. You see how there's no peoples here, mostly speaking? Okay, not so much in that whole yellow land. So I really want you to understand that the net beneficiary of any kind of conflict in Europe is always going to be the United States of America. That's how we ended up, you know, it's a simple World War II lesson that any historian can tell you off the street of why America became so great after World War II. And if you're not understanding that, there's a gazillion YouTube videos that you could absolutely, that will explain it way better than I can. Okay, I'm not a historian. I just do this. That's it. That's all I do. So I want you guys to understand that And that is really the quick macro lesson for today as to why I think the market's rallied so heavily, because the U.S. is, again, the net beneficiary of all this. Okay. Amazon's quarter, I just want to review this from yesterday because I thought this was an excellent question. David loves to inspire me to be more thorough about how I'm looking at the numbers when I talk to you guys. Now, we did show this slide a while back, and a lot of folks are like, oh, Amazon's a $1 trillion company. Just their cloud business is worth $1 trillion. I just want to show you what's going on here. Look, here is operating income. I heard some people quoting Amazon's returns from Rivian as a percentage of revenue. Okay, I kind of understand why you do it that way, but largely speaking, that's not, there's a little bit of missing verbiage there if you're going to say it that way, because really that is a one-time item, one-time gain on the sale of an asset. So it shows up down here, other income expense, okay? So we don't really talk about that as a percentage of revenue. So if you do hear people talking about it that way, just try to double check what it is they're actually saying. The operating income for the quarter was $3 billion, and we can see here that net product sales was flat. Okay, if net product sales is flat and everybody's talking about the Amazon Web Services business growing, it tells you that the core business is actually not doing okay. Just even at the sales line. Let's not even pretend on the income line that they're doing okay, because they're not. So flat sales, but as a result, 50% decline in operating income, right? And then you've got a bunch of stuff below the line because that is the nature of a large company. And then you get this beautiful income that's coming in from Rivian, which is essentially the same, like I said, of you falling on hard times at your job and selling your house so that you can basically have enough liquidity to continue to fix whatever it is that is going on in your career. That's what that is. Okay, now I want you also to see this, because people keep saying, yeah, but they raised prices, la, la, la. Okay, just the piece. This is fulfillment. What is fulfillment? Fulfillment, largely speaking, is that freight cost. Basically, it's shipping. And as you can see, 22 divided by 18 gives you something much high, like gives you about the same as what they raised the Amazon Prime expense to be. It's about 30%, okay? That doesn't account for all the other expenses. Sorry, did I do that wrong? Fulfillment. No, I didn't. Okay, so that doesn't account for the increase in tech expense that every technology company is incurring so that they can continue to grow. So that's going to be both the Amazon business, core business, as well as the AWS business. And it sure as heck doesn't account for this huge, gigantic SG&A increase, which is largely speaking labor. They argued that that labor is only because during the holiday season they needed more people, but I'll argue that we're going to have to see that next quarter before I believe you, right? And then the other thing I want you guys to understand, when people are like, the cloud business, May, the cloud business is worth $1 trillion. This is the revenue of the core business. It's this 82 plus 37, right? This is AWS, $17 billion. And this operating income, $5.2 billion, is what you're telling me is worth $1 trillion. $5.2 billion of income right now is worth $1 trillion. Okay, all right. Guess what? This still has to incur the competitive nature of the other two big animals that have huge balance sheets that are also competing in the cloud business. But I also want to share with you, when I say the core business lost money, I'm not just playing, okay? This is the operating loss on the North American business, which actually did well, 75 versus 82. It's the international business so that clocked them in the gut, okay? So just realize that if you take the 5293 and you just subtract this out on percentages, 34% of its operating profit from the AWS is actually compensating for this gigantic, huge core component of Amazon, right? Okay, guess what? Its competitors don't have these business units that are the main part of the business that are losing money and then just taking all of operating profit out. That is why I am short Amazon. It's not because I'm just confused. Now, in fairness, today the whole screen was red first thing in the morning, so it's really like, David's like, you should take a victory lap on that. I'm like, I'm not taking a victory lap until basically people stop talking about $1 trillion and start talking about, hey, there's real problems at Amazon that we need to hear about in the next quarter. So this is the deal on Amazon. This is, by the way, in the Discord. If you are a subscriber, I do not hide any of my research. It's not like mumbo jumbo that I'm just saying. Like all the other women that get bombasted in financial services, I actually have to produce where my citations are, and that all goes in the Discord. Anyway, so if you are a subscriber, awesome. You can take a look at the numbers, but also this is publicly available information. So I did want to go through that. Clorox finally seeing weakness, is not recovering in this crazy rally that we are starting to experience here. And that really has to do with the fact that it's got no business trading at 33 times earnings, okay? Like, before Clorox reported earnings, it was a short for me. And I told, and because there was no vol in it, it was a beautiful, very cheap series of puts that I purchased on it without any kind of conflict, and then crushed it because I have been short this thing since it was at like 170, quite frankly, and I realized what was actually going on at Clorox. Clorox, I'll have the other slide next time that shows you how bad the earnings report was. Clorox is really having supply chain issues, and I think what she did, in fairness to her, she thought transitory, I'm just going to kind of hold my breath, use up all of my existing inventory and pray the price goes down on chlorine. She missed it because basically she didn't realize everybody's moving south and putting those chlorine and other things like pools, etc. And also that the supply chain issues would actually preference certain higher margin stuff to the chlorine that she's purchased for that part of the business. So the rest of the business has to compensate for that. Add to that the fact that sales are also dropping, and you have a company that's essentially going to adjusted EPS coming in at like 41% down. I mean, these are like really ugly numbers, and she's guiding down next year, right? So even if I give this $4.50 a market multiple, it's still trading currently at 33 times that multiple for next year. I mean, I gotta really believe that she somehow magically can fix this thing, and also a bunch of people want to buy a bunch of bleach. That's what I have to believe at these valuations. And I have to believe that somehow I would rather have Clorox in my portfolio than Google, which, by the way, has zero problems on this quarter. It was a very spotless quarter and is going to do this 20-for-1 split that actually allows more people to buy it. So I don't understand the bull argument on Clorox. If someone wants to explain it to me, I'd be thrilled to hear it because I can be wrong. I have no problem with being wrong, especially if you can save me some money by correcting me. I just don't get it. Let's see, are there any other things? Oh, and the last thing I really want to talk about, conditions, no matter what happens, are unambiguously good in all of these markets. So if you're looking for ideas, I have some ideas that I've shared. Maybe you don't like my ideas, but unambiguously, the investment banks will benefit no matter what. Maybe there's an exchange rate issue, but really not, because these are US denominated investment banks, and quite frankly, they still do, really not. Do you know what I mean? All of these guys are capable of hedging out their currency risk, and if anything, they will probably magically find a way to benefit from that. Energy companies unambiguously benefit right now, no matter what happens. Fertilizer companies unambiguously benefit. Metals and mining unambiguously benefit. Semis and healthcare, all of them have amazing, at least 1 year, if not multi-year dynamics. So that's where you kind of just want to find ideas. Right now, this marketplace has come for sale, and you want to just try to, construct the portfolio of your dreams for yourself long-term and your kids long-term. I really do believe that there are some unbelievable opportunities right now. And we've talked about the ones that we like in each of these names. Yeah, and with that, I'm going to hit the pause button. Any questions? Welcome to the show, Trill. Good seeing you again, buddy.
What's going on, man? How are you?
I'm good. I know we're recording, so it's really scary. So only if there's a question, feel free, but I don't want to make you feel on the spot.
I'm cool. Man, we all right.
Yeah, I missed you, buddy. You're awesome. David, any questions you want me to kind of go through?
Yeah, I think Fro, I heard him asking about not PayPal, but Square. So they're going to be in sentiment with PayPal, right? I know you're really bearish on PayPal.
I mean, here's the thing. I don't do enough research on.
He has it for 100. Right. Okay.
Yeah, I don't do enough research on Square, Trill, and honestly, I think that each one of these different payment processors, you got to kind of look. You know what, Square is definitely going on my list after I'm done with kind of what I do in earnings season. There's like this list of companies I know people care about, and even I care about, because they do kind of what I would look at with Square. So here's the thing. I actually think that PayPal is absolutely, as you're thinking about it, taking down the entirety of the payment of the fintech group, period. And it's unfortunate because PayPal really does have issues. And everybody wants to talk about how PayPal has a moat. And I think the first time I heard it, I almost choked on my water because I was like, PayPal does not have a moat. PayPal is literally losing share.
Right.
What's that?
They definitely don't.
It doesn't. It totally doesn't. PayPal is losing market share in every single piece of its business, and it has yet to explain to me how it's going to improve. Like, they keep focusing on transactions because when they were a startup, transactions mattered, and other fintech companies, transaction volumes matter. But the thing is, they're not, like, if transaction volumes were going up, revenue was going up greater than normal, and operating margins, like it was all coming straight down to that operating income line, I'd be like, all right, my bad, all you, I give it to you every day of the week. But that's not what's happening at PayPal. Like, the difference, you know, revenue is growing at 13%, operating margins are growing at 6%, and I think what's happening is they have to reinvest in the company right now to make sure that they stave off some of these competitive things that are happening, a la Square, a la, you know, Shopify, and pretty much every other small vendor that's coming up. You know, so this idea that it has competitive advantage to me is a little bit strange. PayPal is its own special case. So I can't really speak to Square, but hopefully that gives you that story in a nutshell. Anything else?
Mosaic.
I love Mosaic. You know how I feel about Mosaic. Hold on, let me just go back to Mosaic. I don't know. Are you in Mosaic, Trill?
No, I've been in ADM. Remember I was talking about?
Yeah, Archidimond is a good one, and it's really weird. I do want to show you that. I'm really glad you asked about that. I still like Archer Daniel Midland. It's just that, and I from time to time will go long it, but I really do prefer Mosaic more than anything because it's just more straightforward. In fairness, both Mosaic and CF Industries at this point are great ones to have for at least the next 12 to 24 months. I think with Mosaic, it's a little bit easier because with CF, you really have to understand what's going on in the energy complex. They get jogged around a lot more. You know what? I'll do a deeper dive in CF at some point so you guys can kind of see which one's better. But I wouldn't necessarily like the reason I like Mosaic. So they make fertilizer, and this is their deal. The fertilizer they make is potash. Here, I'll put it here. They make these two, phosphoric acid, which is basically phosphate. That's what people usually call it. And then potash. And these are like the chemical names. And in the Discord, there's like this paper from 2020 that really describes the fertilizer market. If you're trying to get smarter on the fertilizer market, I stuck that one in there because I think it's a good one. And what you want to notice with the fertilizer market is how tight it is. So even going into 2020, you had very little. Here's the supply. This is the total capacity, and you could see in 2020 they were already at capacity. And then, so this is when you just subtract these numbers, this is what was left that they could possibly grow the fertilizer market at. Well, between 2020 and 2022, a few things happened. Number one, China was like, we ain't exporting anymore, friends. Number two, the price of nat gas went up dramatically, which made a lot of people like, oh my God, I can't actually even produce this even if I wanted to because I actually can't get the nat gas that I'm needed relative to the other things that I have to do in my country. That's part of the reason that even though people talk about all kinds of different things, that is also in the background of every producing nation. Although most of the nations that produce this potash also have access to nat gas at a beneficial price like we do. The thing that is really intriguing, though, is that we had a few really bad crop cycles such that we drew down what was actually in grain storage. This is like Joseph in the Technicolor Dreamcoat, if you've ever seen that musical, when the Pharaoh's like, we need to actually have grain in case something really bad happens. It's really literally that. As a result, this was from... I think this was from Mosaic's earnings release. It was either from Mosaic or CF. because I always just take their work because their work is going to be better than anyone else on this stuff. But these are the prices of what's happened per bushel for the farmer in each of the major crops for which you would be using fertilizer. And Archer Daniel Midland confirmed this as well with corn. Corn can oftentimes be turned into ethanol when the oil price and the nat gas prices get very, very high. You'll see corn usage move from food to ethanol. And that, I have to throw that slide in there. Right now, turning corn into ethanol is really profitable. So like that is actually driving soy, which was weak last year relative to wheat and corn, as well as other things. So that's really great for your Archer Daniel Midland and is a dynamic that they're seeing. Now, it might just be that people are being weird about ADM because of the fertilizer price, but quite frankly, that is a very smart management team, so they're not going to F that up. So I think it's really weird that people feel that way, but whatever, you know. Anyways, I like the fertilizer pure play because I feel like a lot of people got to get smarter about ag, and this one is unambiguous. The only reason that it traded down in the first place was because this Vale, which is a company that largely is in the EV space in a sense because they do all of the mining stuff for batteries. They bought this one miner in Brazil that happened to own about $1.2 billion worth of Mosaic. And Morgan Stanley did the secondary offering. This was in, I think, November. And what happened was it's just simple supply and demand. That's a lot of shares. I knew that it would trade sideways until it could be demonstrated clearly that Mosaic could hold the 37 level, because at the 37 level, Morgan Stanley no longer is a seller at any price. Because typically what happens is when you have a deal that fast, Morgan Stanley will take some of it down, and then everybody else will also start doing their research on it. Anyways, it's been over 37 for a while, and then it reported earnings that were crazy good this last quarter, 56% revenue growth, 278% gross margin increase. So like for every dollar they sold, they made 3 times what they used to make on it. It all came straight down. The bots, unfortunately, didn't realize that there was a number making the numbers look funky, which was this sale of assets that basically comes in and this tax benefit here. But if you really look at the number, they brought every single bit, more or less, of that increase in gross margin straight down to earnings. And also, what they did was they actually sold the fertilizer for more. So instead of trying to sell the same volume that they sold last year, they're like, no, friends, we're not even in planting season and you want to pay me 3 times what it's worth. So like, let's wait till it's planting season. I'll sell you all you want at whatever price I feel like you should buy it at. Do you know what I mean? So that's what's actually happening here when you see the volume numbers, 2.7 last year, 2.1 for the 4th quarter of this year, and so on and so forth. Realizing though that, you know, a huge buyer, again, I want to go back to this croplands. All this stuff is in the Discord. I think some of it I'll post later today. Brazil is going to be a huge breadbasket. If we go to war, then obviously you're going to have to feed people, and that will be beneficial to Brazil, et cetera, et cetera. And Mosaic is just a beautiful pure play on that. So that's why I love Mosaic. I still think it's cheap even here because it's still trading like single digits earnings, and it's growing at like 50 times, 200 times. It's growing earnings at 200 something times, but it's even growing revenue at 50 times, so it's nowhere near where it should be, in my opinion. And that's going to happen for a while. That's going to be, and if we get any,
double,
what's that?
Right? A double from here. Double.
Oh, it's easily a double. It's whether or not it stops at a double is really what it is. Because look, here's the thing: if we have, go ahead. Oh, okay. So what I was going to say is like, we drew down grain reserves last year. So people have to, like, if we're going to go to war, the last thing you want is to not have enough grain and rice if you're really going to do it. Like, right, if we're really going to fight, do you know what I'm saying? You don't want to have no food in your country if we're really going to fight. And just realize globally, we drew down reserves because of monsoons in India, some really weird weather in Russia, and like some weird stuff that happened in Brazil. So you gotta buy it. Like I know right now we may resolve this fairly quickly, but if you're a country and you're like, holy crap, we got really close, the last thing you're gonna do is just be like, yeah, let's push our food stock down the line. You're just not gonna do it. It would be like the dumbest strategic move you could possibly do as a nation, unless you feel like losing your power as a leader. High oil. If you think high oil prices pisses people off, try starvation. You know what I'm saying? Anyways, and if we also get any kind of bad weather, like another monsoon, then that just extends out the need for fertilizer over the next year. That's why I'm saying, like, at a minimum, I mean, look, I never know timing. The market hates me sometimes. Is it a double, like in 2 years? I have no clue. I just know right now, even just to bring it to fair value, it should be a double. But good Lord, the market knows how to keep something undervalued for a while. It's so ridiculously, massively undervalued.
That's funny you talking about potash, because I was actually looking at NTR that like came across my radar this weekend when I was like doing my due diligence trying to find some other.
Oh, cool.
So Mosaic came across, and then NTR came across as well, and I was like, wow, both of these got good volume in there. So I was like,
yeah,
I'm following the same sentiment with you on that.
Yeah, Trill, I know you're a deep diver. So, like, if you look at these smaller companies, some of them could be great. What you want to do is just make sure that the geography is in your benefit. So, Russia does have some pretty good exports of potash, but you just got to be careful because geopolitically, they may not, I mean, if Europe goes to war with Russia for reals versus this thing that I knock on wood, because I really don't like seeing. I mean, the area I grew up in had a lot of folks that enlisted, so I'm not really looking forward to losing friends. You know what I'm saying? But let's hope this skirmish is over quickly. But the economic sanctions, just make sure that that's not stuff that's being pulled out of Russia in particular, or some country that might end up with sanctions as you're doing your due diligence. That's the only thing I would highlight. But if it's not, it's an awesome market for whatever it is they're doing.
Well, the company, I guess I got to do some more DD because the company is headquartered in Canada. So I don't know.
Yeah, Canada also can. Yeah, you should be okay, but just double check because sometimes it might be listed here, but whatever. If you just go into the 10K, it'll tell you usually, and some of them will even give you a nice map of exactly where it is they're mining the potash from. But yeah, Canada does have some production, and it's basically a lot of the nat gas producing countries will actually have potash as a function of what they're doing. They'll also have nitrogen. So you've got it. Yes, but it's just worth a little quick double check.
Listen, look, they do potash, nitrogen, and they do phosphate.
Yeah.
Phosphate.
Yeah, they should, because nitrogen really is always attached to areas where you've got some beautiful oil gas production going. It just is the nature of the ammonia. So, I mean, I'll do a little deck on it because you probably already know this, so I know you've been working on that area for a while, but like apparently there's a use of nat gas produces some things after it's done, of which makes it easier to create the ammonia that nitrogen is in. You know what, I'll do a proper slide on it because I always describe the science funky. It's in my head, but it's not straight enough to where I can like describe it verbally. But I'll get it for next time. But yeah, I wouldn't be surprised. In fact, I think Canada actually does a little bit of a better job even than other nations in nitrogen production in general for fertilizer. Yeah. Just if it's a Canadian company, it should be okay. You just got to make sure there aren't any rando assets that are in Russia.
Right.
If you've done that, then that's probably a great name to look at.
Okay. But yeah, I like Mosaic too. That was like, so those were like the two companies, like Mosaic and like I think it's Nutrien is how you pronounce their name. So yeah, so I'm like, I don't know which one to go with. I was on the fence. Like, I don't know which one to pull the trigger on. You know, I talked to Dr. A, and Dr. A was like, well, I like Nutrien. You know, he liked the chart, you know. So I don't know. It seems with the
Are you doing it in the options market, or are you doing it in the, like, just buying the stock?
well, I was gonna do an options, you know, but go ahead and do like a leap, you know,
Oh.
and not not like really trade it, you know.
Mm.
So I'm looking at it long term because I think like we're just beginning on a lot of this stuff. I don't even think we're done. Like you said, Mosaic could double. I think we just started. They haven't even raised the rates yet, you know, and
No.
this is where we're at now. What is gonna happen when they start talking about rate increase number 3? Like this is gonna be crazy.
Yeah, I totally agree with you. I totally agree with you. If you're going to look farther out, then do it as a, like, you know, do it as a call spread, just to make it ever so slightly cheaper for yourself.
Right.
And you know, this market is so volatile. You can definitely be crafty. Like Mosaic traded down to, I think, 44. It kissed $44 before it recovered this morning. So you can, you know, see, and then the vol spiked up all the way through the options. So on days when it's red, I think you can take a look at both of them and see if you can just do small lots of options slowly but surely. I mean, I think this market continues to be very confused I thought it was going to end at the end of this month, but I think we get another very volatile March because, like, if I look at what's actually trading and how it's trading, it doesn't really make sense, right? If we're really going to go to war, then the market should be doing something very, very specific. Right now, it's just puking, you know? Like, again, you should see specifically, you should see basic materials not red. If we're really going to war, if we're really going to do this, right? I say, then this whole area, that should be green, like deep, dark green, right? Because basically, if there becomes this craziness between Europe isn't like the EU, X that, you know, is not a producer of energy. They're going to have to get that from somewhere, right? And if Russia decides it doesn't want to give it, that's 40% increase in demand to us. Right? Like, you know, the Middle East has a pipe that goes down the middle. Maybe they can get it in. I don't know. But like that really mostly accrues to us very quickly. You see how fast that curve unbackwardates and how quickly we put on capacity, but it is kind of what it is. So this, if the market was really trading in a way that made any kind of sense, this would be green. Right? The financials part, the broker dealers would actually do really well because you have to finance war, which that's what broker dealers do. Not the regional banks, but the broker dealers do it. And then you would have basic materials going ape because you would have to finance the things that are associated with war, right? So we don't see any of that. You know, instead we have like Freeport McMoran trading down. What's it do? It mines copper and gold. Doesn't even make any sense. So this to me was just a generalized puke out. And if I don't know how long it's going to take for the market to stop doing that and start doing something else. With rates where they're at, you can't even be like, oh, bond financing of debt. Nonsense, my friends. Like, let's just call it what it is. Rates are at all-time lows. So, like, you really going to make your money on that? Good luck, you know? That's a tough way to make it. Maybe I'm wrong. I don't know. There's probably bond people that are smarter than me that have a lot to say where that is. But, like, it just wouldn't trade like this is all I'm saying. I think you have another shot. My point is really that, like, just slowly acquire at things that you think are cheap and don't pile into it, especially if you're doing leaps because you've got time. You can just wait for vol to kind of do this weird thing, especially if you're doing spreads instead of, like, if you do call spreads instead of just buying calls outright.
What was you saying?
Any other questions? Okay, we'll just hit the pause for today. Thanks for joining. Good luck, you guys. It's a scary market.